Are you currently trying to purchase a home with a mortgage? Are you a homeowner who has lots of questions about what's happening in the market today? If so, keep watching because I'm going to talk with an expert in the area who is going to go over, in general, interest rates, APR, mortgages, and how that is affecting our economy today and what you can expect. Hi, my name is Jennifer Kneppley and I sell residential real estate with Taylor Allen Properties.
Hey, Bobby Andrews here with Bank of England Mortgage, and that's England, Arkansas, not England across the pond. Please believe we would rather have happy hour with you than tea time. Specializing in conventional VA, FHA, all the vanilla products.
Okay, so I know that there's a lot of questions right now in our economy regarding current mortgages, people who are trying to get mortgages. Things are changing rapidly. Like I said, there's a ton of uncertainty. So I spoke with Bobby Andrus, who is a mortgage lender expert in the area. And just to kind of get not only some general information for everybody to understand when it comes to interest rates, mortgages, the Fed, but also how all of that information is going to pertain to us right now, whether you're trying to buy a home or you currently own a home. So keep watching. Okay, Bobby, give me the interest rate definition and the federal funds rate definition.
Perfect. Yeah, I'm sure a lot of people have been out there and they've seen the news, how the Feds cut the interest rate to zero. And so what they're talking about more is the money that banks trade amongst each other and with the federal government. And what that applies to is more or less auto rates, home equity lines of credit, and credit cards for the most part, in terms of what it trickles down to in terms of the consumer. But for us, it doesn't necessarily translate into interest rates for mortgages themselves. An interest rate for a mortgage would still be somewhere in the ballpark of 3% right now for a 30-year fixed.
So the federal rate is for the banks and the Fed, and the interest rate is for the borrower.
Correct, for the consumer.
Okay, gotcha. Okay.
And then a lot of other things that you might see are interest rate versus APR.
Okay.
An APR starts with the interest rate, and then it tags on any sort of lender fees, any sort of lender percentages, any sort of discount points that you might be paying, and also your mortgage insurance.
Okay, awesome. Okay, how does interest rate work on a loan?
So an interest rate is just something that you can think of as the cost of borrowing money. Since you don't have several $100,000 to pay for a new house out of pocket, you go to the bank gives you that money. In return, the bank needs to make a profit on that money, and that's where the interest rate comes in.
Okay, awesome. What are some types of interest rates?
So there's a fixed type, an adjustable type for residential home mortgages. Those are really the two classifications.
Okay.
You can do a 15-year, 30-year fixed are the most common. You can also do a 20-year, 25-year. We always recommend doing a 30-year. That way your monthly payment is as low as it can possibly be in case anything were to happen with your employment or your income stream. At least you would be covered in that sense. And if you should choose to, you can pay more towards the principal, and if you have the discipline, you can pay it down earlier.
Okay, so right now we're experiencing a situation that kind of what he's talking about. So what I'm hearing is you don't want to be house poor.
Correct, exactly.
You want to have, like, if you do have the money to pay it back, go ahead and pay it back, but give yourself the leeway or the capacity to, like, play it cool if you need to play it cool.
Unforeseen life circumstances,
right.
Death or illness in the family, divorce, certain
coronavirus.
things. Coronavirus, of course. Anything that would put a constraint on your personal financial situation.
Gotcha.
There's also adjustable rate mortgages, and usually they go in terms of a 5-year, a 7-year, and a 10-year, what they call ARMs, adjustable rate mortgage. And with those, your interest rate's going to stay fixed for either 5, 7, or 10 years typically, and then after that fixed period, it'll adjust every year based on what the market conditions are at that time. Could go up, could go down, just depends. And in those particular cases, that would be more for an individual who's purchasing that knows that they will be selling within that 5 years, within that 7 years, within that 10 years at the most.
So like an investor who knows that they're going to get rid of a property within that time frame, so they get a smaller payment by paying just the interest rate versus a lot of money towards the principal. They sell it, they pay it off, hopefully make some sort of profit on it,
right,
and move on.
Exactly.
Okay, so Bobby has given us kind of an overall idea of what to know about interest rates and Fed rates and how that works with getting a loan through a bank. Now we're going to kind of correlate it to what is happening right now, because we know that's really important, and what buyers want to know about, and also what homeowners, current homeowners, want to know about. So tell us about the Fed rate and what happens when they cut their rate.
Right. So the Fed rate, again, is just what the big banks or what banks kind of charge to borrow money from each other or the federal government. So in terms of how that affects buyers of the ground floor like us, is it probably affects credit cards, in a lower interest rate on your credit card that you get issued, lower interest rate on auto loans, kind of short-term debts is really how that's affected more. Mortgage rates in general are affected by that to a certain degree.
Okay.
Kind of what's going on with the world economy and what's going on with individual banks and how many properties they have on the books, what their risk assessment is of potential defaults going into the future with the economic conditions as they play out.
So from what, this is how I understand it, and correct me if I'm wrong. When the Fed rate is what is used between banks and the federal government to buy and sell loans amongst themselves.
Correct, and to trade money with each other.
It has nothing to do with the buyer, except that maybe they can get a, I mean, how does that affect the buyer?
Right. It affects them down the line in terms of, like I said, auto loans, credit cards. That's really more of what gets affected versus mortgage rates are affected by a lot of other different factors.
So, concisely explain this. Why did everybody run out and get their home refied when the Fed cut the rate?
So, when the Fed originally cut the rate, interest rates were highly dependent on what the Fed was doing at that time.
Okay.
Also, the news with the coronavirus broke slightly before that. So, all those factors drove down interest rates and what the big banks gave out to the individual customers.
Okay.
And so, at that time, big banks went real low with their interest rates. They created a huge boom in refis, and as a result, they had so much volume come through with refinances that they didn't have enough manpower to process all of the new loans.
That's what I heard.
And as a result of not having enough manpower to process all the new loans and securitize all their new loans to sell off into mortgage bonds, then they jacked up the interest rates to stop that flow of refinance business.
Okay, so you are the expert, so just kind of let us know what current home buyers need to know right now and what existing homeowners need to know right now.
Okay, so for current prospective home buyers, they need to know right now that the economy is kind of in a weird place where there's a lot of doubts, there's a lot of fears going on, and as a result, you're going to see a lot of different restrictions go on with the loan programs. Government loans are currently on hold. Basically, they're also putting a lot of restrictions on credit scores. So what one credit score would have been in the past now has to be higher to be able to be approvable. So if you are a prospective home buyer, this is really what you want to do. You want to turn around, consult your mortgage lender, have them pull your credit, see what your credit's looking like, and then kind of follow their guidance in order to get your credit score as high as possible prior to pulling the trigger on a potential purchase and getting your ducks in a row, really. Really, since we are in kind of a weird time with the economy and people are stuck at home and basically trying to kill time, go ahead and take a look at your personal finances, figure out what your monthly expenditures are, and really you want to look for a home that's going to be with a monthly payment that's about a third of what your gross income is.
Okay.
And because as a mortgage lender, we don't take into account a lot of your other expenses. We don't take into account like car insurance, cost of living, in terms of what your food costs are, gas costs, all those items we don't really account for. So really take a look at what you can afford, because we don't really want you to be house poor either.
Okay. And then what about current homeowners? Give them some advice. This is, I think, crucial right now.
Right, right. So right now with government loans are really the ones that are taking the biggest hit in terms of what's happening with the economy, the coronavirus, everything like that. As a result, you're going to see conventional loans, the rates going down, the terms getting slightly better, the mortgage insurance rates for those getting slightly better. So at this time, if you purchased, say, with an FHA loan a few years ago and you think your property has appreciated in value to where you now own 20% of it, go ahead and take a look at doing a conventional refinance, get rid of your mortgage insurance, make your payment a little bit less, and that's really the best at which you can do. For other people who already own homes and who have a good amount of equity in there, you might want to look at what your other expenses are. If you have any auto loans that are fairly high that you want to cut out of your monthly expenses, if you have any other debts that you want to pay off with some equity in your house by doing a refinance, this time would be the best time.
Okay, awesome. Thank you so much.
Of course.
I appreciate it. Okay, Bobby, anything else for anybody out there right now that's going through what we're experiencing?
So there's a lot of talk about payment deferment or payment forbearance.
Okay.
And from what I understand, forbearance would mean that the bank is not going to collect on your payment for however many months, but at the end of that period, then you owe that whole lump sum.
Oh, you do?
Right, right. That's the
Okay.
difference between deferment and forbearance. Deferment, on the other hand, would be the bank tacking on an extra 3 or 4 months at the very end of your term, rather than asking for it all at the end of that period that you're not paying.
Okay.
So those are really the differences whenever you would be asking your current mortgage servicer or your current bank if they are offering some sort of term like that, just to be aware of, or to ask your mortgage professional, ask your banking professional, so that you don't get stuck on the hook at the end of that period.
Okay. So that was confusing to me before he just explained it. So if you do have a mortgage and you're calling your bank to get help during this time, be clear on what you're signing yourself up for.
Exactly.
Thank you, Bobby, for all of that expert information regarding interest rates, mortgages, and what's happening today. We are in the state of Florida officially on the stay-at-home or self-distancing or quarantining, whatever terminology you want to use for it. It is mandatory at this point. Real estate and lending are definitely essential to the economy, so we can keep working. We are going to keep working at a social distance. We are going to do the best that we can for our customers with what we have. Corey and I have been working diligently to get ourselves set up to communicate with our customers virtually and do the best that we can for everybody, to keep everybody safe, to keep our not just our families, but people who work with us and the community in general. Things are changing so quickly when it comes to the economy, when it comes to interest rates and mortgages. Please, if you have questions about your current mortgage or a mortgage that you are trying to get, comment below, call me, call Bobby. If you want to call me first, I will get you in contact with Bobby. Because we want to be here for you guys and be as helpful as we possibly can. Comment on the video, like the video, share the video, subscribe to our channel. Like I said, we are going to be posting videos every Wednesday like normal. There could be some that come in on different days, and I will let you know when that happens, but we're really trying to keep the public informed right now as best as we can with what's happening pertaining to real estate and things that go along with that. So we'll see you next Wednesday.